She's back! Hello, everyone. Welcome to Happy Hour. I'm Rebecca Gomez.
And I'm Cody Willard, and this is where I'm not afraid to two-time on Rebecca halfway through the show.
I know. Can you believe that? This guy, two-time.
But why are you leaving halfway through the show?
Yeah, no, I've been really sick the past couple of days, and of all days, my birthday was yesterday, and I was in
Happy birthday,
bed,
by the way.
sick all day. I mean, I can barely even talk. Bad fever, aches, chills, the whole 9 yards. But anyway, and since we're doing our show from Glendale, Arizona tomorrow for the Super Bowl, I have to catch a flight, a 7:30 flight out of Newark. So I'm going to bail halfway through the show, and Tracy Burns is going to fill in again.
When the cat is away, the mice will play.
Apparently.
Apparently. As Liz mentioned earlier, I even zipped up Liz. I'm all over the place today. I'm flustered. I shouldn't have brought that back up.
Well, Wall Street takes investors on another roller coaster ride early in the trading day. Everyone was worried about big losses at bond insurer MBIA and whether that would translate into downgrades for the entire sector. But the CEO reassured investors in MBIA stock rose more than 7%. The focus then shifted to a lackluster consumer spending report and higher claims for unemployment benefits, raising concerns about that all-important job market. Well, the Dow ended the day up 207 points. The Nasdaq rose almost 41. The S&P tacked on about 23. Consumer products giant Procter & Gamble posted higher earnings thanks to cost-cutting and higher sales. And folks, P&G says it'll raise prices about 6% for everything from Cascade dishwasher detergent to Zest soap. And we're calling it Super Earnings Thursday.
Absolutely.
Because we have a lot of earnings, in Google in particular.
I just want to mention on that inflation thing, all the Fed needs to do is just keep cutting rates and trashing the dollar, and we'll just keep seeing.
Snap.
And we will see those prices from Procter & Gamble rise more than 6% this year. Procter & Gamble. And from New Mexico, what can I say? After hours, we got a bunch of business alerts. Google's out. Stock's getting crushed after hours. Look, guys, the bottom line is, and I said the same thing a year ago. I said the same thing 2 years ago. I said the same thing 3 years ago. I bought the stock on the day it came public. And the bottom line is, you just look at that top line growth. 52% year over year. This is is the single fastest growing company in the history of capitalism. Guys, the stock's down 200 points from where it was just a couple months ago. It's a buy. Like I was saying the other day, I wouldn't necessarily, yesterday I was saying I would have bought it before this earnings report, at least to get some exposure back in. I didn't know if it'd pop or not. Now you're getting a gift. I would be buying it after hours. I
mean, it came in a penny short of what analysts were expecting. Come on, guys. The company earned $1.2 billion in 3 months. And this is a new company. And, this is on top of people saying that advertising online, as well as other venues, will slow down because of the slowing economy. Google's still making it happen.
You hit the nail on the head there. This is a new company, 9 years old, and they're doing $1 billion in profits over a 3-month period.
Jeez.
Nobody in the history of the planet has ever grown like that. Nobody ever will. It's certainly not in our lifetime quite like that. This is an unbelievable story. You got to stick with Google. I mean, yes, it's going to be volatile. It always will be. It's a high beta stock, which means it's going to move more than the market when it does move. But I would get back on that horse.
All right, let's move on. Electronic Arts, this is the big video game maker. They swung to a loss for its fiscal third quarter. And a lot of it was due to their deferring revenue, restructuring charges, and so forth. But the net loss was $33 million.
There's another name that I really like here. Very high margin business, fast growing company. Again, if you look at those numbers, the video game industry with the Sony PlayStation 3, the Microsoft Xbox 360, and the Nintendo Wii, all those platforms hit in the last 18 months, 2 years, and they're just selling, and the excels get accelerated on the software side, the gaming side, where Ertz plays. That's one of my favorite stocks for this year. I would stick with that one, too.
And I tell you, it seems to be there are certain areas, like the iPhones, the iPods, and these Xbox and these Nintendo Wiis, that they seem to be recession-proof. We haven't seen them getting hit like a lot of the other, like the Coaches and the Targets and the Walmarts and so forth. For some reason, people are saying, hey, if I got to choose where to spend my money, I'm going to spend it on a Nintendo Wii, which I still want to get one of those.
Yeah, actually, those are so much fun, aren't they? It's sort of that cocoon thing, right? Where even when you're depressed, you can always go home and play video games.
It's cheaper to go home and play video games. You're right. Okay, let's also look at Monster out with its earnings. Monster Worldwide, that's the parent company of the internet, Monster.com. Let's see, what did they reported higher quarterly profit, and they benefited to a great extent from their international growth. People overseas also tapping online to look for jobs.
Imagine overseas growth from an American company, right? Bailing it out. But the fact is, actually, can we pull up a chart? We don't use charts very often on this show, but look at this one-year chart on Monster. The Deutsche Bank analyst who decided to downgrade this thing today before earnings, I think he ought to be shot. Taken out back and shot. This stock is down 50-something percent.
Let's just spank him.
All right, you can spank. I'll shoot him. Either way, I mean, what are we thinking here, guys? The stock's already priced in so much disaster. You know what? This is another fast-growing company. I don't know that I'd actually own this one, but I wouldn't doubt. He was at buy when it was at 50. Now it's at 27. We're going to hold.
Well,
come on.
Also think about, I mean, if the case. Don't spill your Sprite again. He spilled his Sprite just a minute ago all over everything. But if the job market does weaken, as some are expecting, then Monster.com will benefit from that as more people go online to look for a job.
Although that would be the bull case for it, but in reality, when that happened back in 2001, 2002, Monster got crushed.
Oh, did it?
It did. It's a tough business.
Oh, you would think the opposite.
No, it's the reason why a lot of their business actually comes from the employment side rather than the employee side. So it's the employers that are paying Monster a lot, and it's just and when they start pulling back, as we're reading in the newspapers these days that there are hiring freezes and everything, that does hurt Monster.
Well, then Monster needs to go after the employee side.
Why not?
Yeah, definitely.
And they do, but it's just not enough. There's just the juice isn't there.
All right, let's bring in our first guest, Maria Fiorini Ramirez. She's president of MFR Incorporated.
Welcome back, Maria.
Regular on Happy Hour.
Thank you.
Wash your hands after you shake my hands. I've been coughing all over the place.
I ain't
Sorry,
scared.
everybody. Yeah, next week you're going to be without mouthing me. Maria, so when the notes that you sent to us, you were in particular focusing on the jobs report coming out tomorrow.
Well, I think the reason is that people have been focusing on the fact that in the last couple of months, the unemployment rate has gone up. And as you know, bad news sells better than good news. What people are really not focusing on is that we're still looking at an unemployment rate that's been 5%, on the 5% for a number of years, and that 95% of the other people are working and have an income and are spending money, which is a good thing for the economy.
So you're not concerned at all that we saw that the last week's the more people were applying for unemployment benefits, and I know we like to look at the monthly because that takes out a lot of the volatility. But you're not concerned then for it edging up just a bit.
I think that you're going to see the unemployment rate edging up a bit. You're going to see those numbers like all over the place, and you have yet really to see the full blown out impact of the recession in the financial service industry, the mortgage industry. So that's going to filter through. But I think that what you're really looking at is a market or an economy that's already faced with a lot of problems. I mean, a lot of this is already priced. The bad news is priced into a lot of things already. So I think if you look over the horizon, what you're probably looking at is a couple of quarters of shallow growth or no growth, or maybe even a small negative growth. But I think that if you look things further out, the world is doing extremely well. Not only that, there's a lot of money to be spent and a lot of money to be invested, as we have seen with the financial institutions in the U.S.
Liz, I'm going to flip all of that upside down because I think I'm getting an entirely different picture of this market and the economy itself. We've got so much concentration from the federal government trying to boost this economy. I'm thinking the next 6 months are about to be on fire, and then we're going to have to pay the dues in the last half of the year. And meanwhile, everybody is actually expecting this first half to be horrible and the second half to be good. I'm staying very bullish in the near term because I think this market and the economy is going to be a lot better than anyone realizes.
Well, I certainly would tend to believe that this fiscal stimulus is like a drop in the bucket. I mean, from people that I talked and trying to make your own kind of assessment of
the
things,
rate cuts too,
it's not a lot of money that is going to be spent. I mean, gas prices are high, consumers have been squeezed for a long time. But the cuts in interest rates should certainly help out the refinancing of these subprime mortgages, or the people that basically have a subprime mortgage but have a job and can pay, and there's time to maybe restructure now with much lower interest rates that we're seeing. But we haven't really seen yet is banks being more generous, and that pipeline of creating credit and selling those instruments to somebody hasn't been recreated yet. So it may take a while for the lower interest rates to create the benefits for the household.
Maria, are you comfortable where the economy is right now? I mean, people are debating whether we are in a recession, whether we're going into a recession. But as you say, the job market is historically extremely healthy. Interest rates are low. A lot of people do own homes. Some people are struggling, but that's the minority of the homeowner population. I mean, overall, it seems the economy is not that bad.
And I think, Rebecca, if we were able to come through this, hundreds of $billions of write-offs, and the foreclosures are huge, historical in perspective. If we were able to come out of it with a couple of quarter, weak growth or negative growth, that's pretty good. We need a cleansing once in a while whenever you get euphoric in taking risks.
A refreshing, perhaps?
Definitely so. I think that we had too many years.
Don't egg them on, Maria, please. Don't egg them on.
We had too many years where credit was given where there was no expectation of getting paid back, given all the standards that we use. We need a little bit of a cleanup period. We've gone through it the last 6 months, maybe another 6 months or 12 months. I think we'll be all right.
I've got a great idea for the Fed. If they would actually take rates to -3% and start paying people to borrow money, then we'd solve everything.
Well, we had money given out for free for a while. So.
And we're about to do it again next month, in the next 6 months,
Maria,
right?
thank you so much.
Free money for everybody. I want my $2.
Always a pleasure to have you on Happy Hour,
Seriously,
definitely.
my girlfriend.
Another one.
I'm sorry, I'm all over the place.